Welcome to another Tracking Trends Thursday with Kristen Mason Coreas, owner of the Homes at Mason team. Today is Thursday, December 4th. Last week was Thanksgiving. I hope you all enjoyed a happy Thanksgiving. We are back again on Thursday. Let's take a look at what is happening in real estate, locally and larger at wide. Starting with interest rates. So interest rates as of today are averaging 6.19%. That is down from last week, down from last year, a touch in both cases. That's a nice place to be considering where we've been. You can see here, 6.17 is the lowest we've been in a year. And taking a look back, here's it graphically for you. So our highest point in the past year was right around 7.04, and you can see pretty steadily been coming down. This is the 30-year line here, 30-year fixed rate. So compared to where we've been throughout the year, it's pretty darn good. And we've been trending downward. Down here, you can see going back to 1970, what interest rates have looked like. So that is good news for buyers these days. And what's happening in national economic and housing news does impact what happens with interest rates. So jobless claims did fall last week to the lowest point in more than three years. However, private payroll showed companies cut 32,000 workers in November. So some mixed messaging there in regards to what's happening in the labor market. Mortgage rates, this says, edged up last week. So maybe they went up and down. I actually think that might be a typo, frankly, because then it says optimism grew that the Fed would lower their rates in December, which means normally mortgage rates normally would come down in response to that news. So I feel like that might have been an error. What's not an error is that latter part, which does say we are currently expecting the Fed will probably drop their interest rate in December, and that would relate to a lower mortgage interest rate usually, which is what we did see at 6.17. Is that where we were? No, we were at 6.19, I think. So, expectation is it's as good as it's going to get right now for the time being. And purchase mortgage applications rose 3% for the week, being 17% higher than the same week last year. Also, the FHFA home price index showed growth in quarter three. Yearly continued appreciation since 2012. Prices are continuing to appreciate. So buyer activity is still happening because mortgage applications are up, even though prices are still up. So those people out there who might be thinking the market's going to crash, we are not really seeing signs of that. So understand that's like huge speculation, and that might be people who don't know what they're talking about. Now, in the Mid-Atlantic region, which includes Virginia, Maryland, DC, Pennsylvania, West Virginia, Delaware, and New Jersey, purchase contracts fell below last year, even though they had been trending higher than last year for the past 3 weeks. So there were 1.7% less contracts than the year before. So that's lower buyer activity in the Mid-Atlantic region, but I think I don't remember now. We'll take a look at what's happening hyperlocally. List prices are still on the rise. So here again, we see prices are not dropping, people. If you or people are waiting for prices to come down, that is not what the data is showing us. Showings were down slightly for the week and from the same week last year. Not enough to really be concerned. New listings also fell for the first time. Now that's interesting because new listings contributes to more inventory, which is good for buyers and might have a downward pressure on price, but less listings means less inventory, less choice. So that is what we used to be seeing for a while. Now, again, it's 1 week right now, so not to be of concern, but healthy market overall is what I would say. So let's see, what does this say? The 0.7 decrease from the same week last year. The first time, that was the point, the first time in 11 weeks that we've seen new listings not be higher than 2024. So it's not a trend yet, but an interesting data point. We'll see if that continues. For the larger DC metro area, showings were flat year over year and down 12% from the week before. Normal this time of year, less buyer activity is what we would expect, less overall activity is what we would expect. Year over year, purchase contracts were also down, so that does track 8.7% from last year. So that might be related to the government shutdown and kind of the after effects of the government shutdown. So, and compared to last week, to be expected, down from last week, 2.6%. Time to contract up 3 days from last year, up 1 day from last week. The median time right now, 37 days from going on the market until under contract. New listings, only 874. That's not a lot, people. So again, when you think about inventory, only 874 new listings came on the market. That's actually an increase from last year and a decrease from last week. There's not a ton of market activity this time of year. A lot of people are more focused on the holidays. So if you're a buyer and you don't want to be competing with other buyers, give me a call. It's not a bad time to be a buyer right now. Median list price is basically flat year over year and down from last week. Not concerned that it's down from last week. That happens this time of year. So active listings up 34.4% year over year, down week over week. And in terms of our hyper local market, which includes Arlington, Alexandria, Fairfax, and Falls Church, we run this for you specifically at Homes by Mason. This is the most current data we have. It's run up until Tuesday. So this does include Thanksgiving. That other data actually did not include the week of, did not include Thanksgiving, but this does include the week of Thanksgiving. So therefore, contracts and listings were down week over week because it included Thanksgiving. That totally makes sense. People took a break for the week of Thanksgiving. So we were less week over week and less than the average. And so in terms of year over year, when we look at Thanksgiving week last year, we actually did have more contracts by a healthy amount here, right? Look at the green bar. That's probably as high as it's been, except for maybe this week here. So a lot more contracts were written this Thanksgiving week than last year's Thanksgiving week. I think that was an after effect of the government shutdown. I think people who would have bought during the government shutdown are buying now. I think I said this last week. So I think that we're just seeing a little more activity now than we normally would have because it just got pushed out by the government shutdown. And we have buyers who that happened to. We have buyers under contract right now who put their search on pause during the government shutdown and then came back and they're under contract. They're being closing on December 15th. Yay for them. And year over year, so slightly more inventory year over year. The demand to supply ratio, interesting. So a lot more contracts were written this week than listings, came on the market. My arrow is missing. Sorry. Wait, where's my arrow? There it is. There's my arrow. So yeah, 146% demand to supply ratio this week compared to last year, 120%. So also a big number last year, but this is the highest that we've seen it all year. So buyers were out buying this past week. Again, likely buyers who would have bought previously is what I speculate. Average days on market was like 47. That's a big number. So buyers do have a little bit of breathing room, and interest rate we talked about already. That is your Tracking Trends Thursday. Thank you for watching, and give me some feedback or some thumbs up if you do value what I share with you here. And anytime you want to talk about it and how it impacts you in your decisions, reach out 571-210-1866. You can call me or text me at that number. Email me at kristen@homesbymason.com or click the link below to get on my calendar. And that's it for now. I will see you next week.